Morning, and you're once again welcome to our YouTube channel. Good morning, and you're once again welcome to our YouTube channel. This is Wednesday live broadcast, and today I'm going to be sharing with us uh, everything that's happened in the market last week. Last week was a very, very special week. It happens to be the first week of the month of July, and we know what happens in special week like that. We tend to receive some kind of economic activities, like some economic data release that tends to rock the markets in a very, very, very vigorous manner. And we tend to see volatility, and we can have some opportunity to capitalize on what the market is doing as at those times. Now, the particular news release that we actually expect every first week of the month, happening to be the first Friday of the month, is the non-farm payroll. Now, what's the non-farm payroll? Non-farm payroll tells us of the employment status of individuals in the United States, and it focuses on industries that are outside the agricultural industry. Every single industry that's outside the agricultural industry, the employment of those industries are taken account by the non-farm payroll. So this helps to give us a kind of indication or a direction to us what the US economy is going to be doing, or what the US economy is doing at that particular time. So as at on Friday, we're supposed to be having NFP release for the month of April, right? Not for the month of June. but sorry, for the month of April. So we're going to be having that NFP release, tell us everything that happens to the US dollar throughout that particular month, and that gives us a kind of perspective as to whether the US dollar itself is actually increasing in strength, or maybe the strength of the dollar is actually reducing because of some kind of employment factors. Remember, employment happens to be one of the major factors that predicts the health of any economy, any global economy. So the health of those things are predicted by how many people in that country, gets a job, or how many people loses their job. So if people are losing their job like on a steady basis in a particular country, we know that there's certain things happening to the economy, some instability that could affect, consumptions, that's consumers' confidence. It could really affect the rate at which people purchase something. It could also really affect how fast importations are done. It could, really affect how fast those people do their exportation. So it happens to be a kind of country that exports things. The more people lose their jobs, the lesser exportation you have. And when countries don't export things, you know what happens to the economy? Nobody buys their currency, and the economy begins to drop. So when countries don't import things, nobody wants to invest in them. So it's usually just like that. If people lose jobs, if more people lose jobs at alarming rates in a particular country, so that really begins to tell us that, oh, something is actually wrong with that country's economy. And one thing investors don't want to do is to invest their money in a country whose economy is not stable. So that's one of the reasons why most investors and speculators look out for the NFP news. So yes, we're going to see NFP happen on the first Friday of last month. We're going to see NFP happen on the first Friday, which happens to be July 4th. But the most amazing thing is that NFP did not happen on the 4th of July, right? It didn't happen on the 4th of July last week. That is, NFP didn't happen on the first Friday. Wow, this is strange. So let's see. Why did NFP not happen on the first Friday when almost every single speculator there in the market was expecting NFP to happen on a Friday? And what was the effect of NFP not happening on the first Friday of the month? So we can see from here that NFP actually happened on Thursday, being the 3rd of July, 2024. And what do we get? Okay, so this was GBP news, speech by the governor there, Governor Bailey. Then we saw also average hourly earnings at around 1:30 p.m. in the afternoon, and we saw every other stuff, unemployment change, unemployment rates, and others, followed by 1:30 p.m. on Thursday afternoon. This would have actually confused so many persons, but why did NFP happen on Thursday and not on Friday? And this happens to be because on Friday, the US government had this kind of imposed public holiday because it was their Independence Day, right? So they had this Independence Day on that came up on Thursday, on Friday, and we also knew that on Thursday was more like a half day, a half working day for the U.S. government, or for every company there in the United States, because the public holiday actually started from 12 p.m. by their time, by 17 GMT plus 4. So started by 12 p.m. in the afternoon, and it ran through the whole of Friday and into Saturday and other things that they had. So for that reason, you don't have too much of economic activities happening both on Thursday and on Friday. That is to say, the way banks behave, if they knew that NFT is not going to happen on Thursday, and they also know that NFT is not going to happen on Friday, then what are they going to do? They look for other times to make NFT happen before NFT actually happens, before those days come. So you see them doing some kind of massive movement on maybe on Monday, maybe on Tuesday, or most probably on Wednesday, and then you see that NFP on Thursday and Friday will not really have too much of effect, right? So I'm going to zoom down to the charts now to show you how the whole smart money stuff actually played out last week, and how you would have capitalized on it starting from on Monday, knowing that on Thursday and Friday are going to be wholly manipulated days. First NFP coming up on Thursday, which on Thursday happens to be a kind of half day, so we won't see much of effects. No bank is going to be investing their money on Thursday, right? No banks are going to be investing their money on Thursday, and all banks are going to be closed on Friday. So we know that smart money has Monday, Tuesday, Wednesday to carry out every single manipulation that they're going to do in the market, and we are going to see how we should have capitalized on that. Okay, so this happens to be a trade I'm anticipating on USD, and as of now, this happens to be also a trade I am in as of now on gold, expecting the buy to that side there, and on BTC, I happen to be in this buy, but it's not marked up here. We'll take a buy from here, expecting to see BTC climb up and climb up to this daily liquidity around here. So I'm going to be making a recap on this very much more later. But let's go back to GBP to see um, what happened last week. So before I go there, I'll just show us how I take my trades now, what I look into when I come into the market, what I look at when I actually come into the market to trade. There are certain things I look out as I look out for as a smart money trader. As a smart money trader, I respect structure, I respect liquidity. But so when I look at structure, what is it that I'm looking at on structure? So I'm looking at when price gets into my major time frame zone, call this my major time frame zone. I want to see price violates, right? If I'm expecting a reversal, the first thing I want to see that is an indication for a reversal is a change of character, and that happens when I see price violates a major high there, right? A recent high. And after that, I don't just jump into the trade. I want to see the particular other block that caused that violation. So the earliest time I can take that trade is to wait for the other block that caused that violation, and I am in. So that's first. If I trade some very volatile pairs like gold, then I really don't want to rush anything at all, because a volatile pair means that it comes to a zone and runs away from that zone multiple times before it does its major move. So that's one secret. If you are not patient, you join this emotional roller coaster, and it rocks your emotion up and rocks it down and rocks it sideways, and before you know, takes you out multiple times before it does what it wants to do. So for pairs like gold, it's either I go with double confirmation. Number one, when I see price violates that zone, I wait for it to create another low and break above it. So this low becomes my inducement low. So before I want to take a trade, if I'm very, very sure of that trade, like this high time frame zone, if I'm very sure of the high time frame zone that this zone is gonna hold, then what do I want to see? I want to see inducement. I want to see price come and take out the initial low it forms. Then I will go for the other block that is below. And what do I see? Goodbye there. Otherwise, I want to see after the break of structure that forms, I want to see another inducement. I want to see another inducement here. And at the mitigation of this level here, at the mitigation of this level here, at the mitigation of this level here, what's it I'm looking at? I want to look at my buy, I want to take my buy from there, right? So you see that I go for plenty of confirmations and I take my buy from here because I'm trading a very volatile pair like gold, BTC, and other ones. Or if I really, really trust the zone, that is to say, if it has met all my criteria, right, then I can take my buy from here after the inducement. But for me to trade gold, I must see an inducement. So this inducement acts as liquidity, right? And for this other place, any liquidity that I see has to be swept. So there's enough liquidity for this buy to actually happen. Uh, for this buy to actually happen, there's enough liquidity. So anyway, that's just for that. For GBP many times I can just go with this because GBP is such a pair that I've traded for long, and I've known that if it's gonna move, it's gonna make that move, and if it leaves that zone, it will not come back to pick you again. So I just many times I just take it there. And you see that yesterday also I was actually waiting for before this buy left me here. I was actually doing that, waiting for price to come back into my zone. Right, this was the first violation of that zone, so I was waiting for price to come back into its price. Came very close and ran. This morning came very close again and ran away. So I'm still confident because this afternoon I may get an entry around here. Otherwise, I may not shift because this whole thing, looks too close to each other and could act as liquidity for price to use to come and buy me into this market. So I'm not moved. So it's either it gives me here. If it's gonna come down here, then it's most likely to come here. So let's keep our fingers crossed. This one is to close to 5. So what happened last week? That's where we're interested in. That's what we're actually interested in. That's where we want to see. This was one successful trade there. So last week started here, last week Monday, the 7th of July. This was Monday, 30th of July, and this was Friday on the 3rd of sorry, Monday, 30th of June, and this Friday, 3rd of July. Sorry. So last week started here, and so we were talking about the NFP. What did we actually see? So this was the NFP trade that people were expecting to happen on Friday, which on Friday we didn't really see any much volatility in the market because banks were on holiday, as I explained to you initially in the video, and this is on this is on Monday, really no volatility. On Tuesday, price gave us something we could capitalize on. Wednesday, sorry. Wednesday, we had this whole movement, and this is Friday. That is this Thursday and this Friday. So, how will you have actually traded this uh, week, GBP USD, to actually get some amount of profit? Now, since that the major move we were expecting did not happen on Friday or on Thursday, but it happened on Wednesday. Let's look out of our calendar. So on Friday we had bank holidays. Good. On Thursday was NFP, right? Which is supposed to be on Friday, but it happened on Thursday. On Wednesday, what do we have? Non-farm employment change, right? So we had the ADP non-farm employment change here, and we have non-farm employment change here, the main one. So we would have been expecting the moves that we're supposed to ensue on Friday, either on Wednesday or on Thursday. So by this, which of these news should you give? Which of these days should you give higher priority? Well, on Thursday, banks were open, but just till 12 p.m. in the afternoon, right? So, if you had received notifications or if you really follow up news, you're going to see that banks were open just half day on Thursday, and as at on Friday, they were totally closed. And this is because of their Independence Day celebration. So, you won't have a lot of money coming into the market by 1:30 because banks close by 12, right? Oh, no, no, sorry, that's this is by our own timing, right? So their economic activity starts by 1 o'clock by our own time. That's the New York session opens by 8 a.m. in New York, which happens to be what 1 p.m. for us, right? Economic activity starts by 8:30 for them, which happens to be 1:30 p.m. for us. So this news was happening by 8:30 a.m. for them, right, on Thursday. But since Thursday was going to be half day, we could actually put our focus on Wednesday, right? So Wednesday was where we had a whole lot of stuff happening. But yet, still that same Wednesday, the NFP came out negative, right? Negative. But let's just go back and see the effect it had on the US dollar. So this was on Wednesday. So it was on Wednesday. So we knew that through last week the GBP itself gained strength and the US dollar was actually very, very, very weak, such that even when sorry, we knew that last week the GBP was very weak and the US dollar was gaining strength. And even when the NFP was coming out in a negative way, it didn't really tend to do anything to the dollar, right? So let's see what happens structurally. Because if we must trade properly, then we must always use our structure as the starting point of everything. So structurally, we had that the dollar has been really, really, really on this intense rise. Personally, I was waiting for it to come back here and induce this 4 hours zone here. So I was waiting for it to come and take out this 4 hours zone. So what do we get? We saw that price was able to trade very much high, and give us a kind of break and close, a very slim break and close here above this initial high, which would have told us that price is willing to go up. But immediately, what did we see? We saw this reversal candle here, right? So for me, it was already a good indication. When I saw this rejection here, I was just looking for an opportunity to counterlize, of which when I see things like this on my 4 hours, I quickly run down to my 15 minutes, which is what every skillful SMC trader is supposed to do. So run down to 15 minutes and you want to see on 15 minutes. If it's actually not clear on 15 minutes, then we want to go down to our 5 minutes and spot out the opportunity clearly. So for me, this was more like a turtle soup, right? On higher time frame, but on lower time frame, I had a whole lot I could actually counterlize on, as on the lower time frame. So looking at this here, and the next thing was to do was to look for the first violation, which was here, and after that first violation, what is it that you want to look for? You want to look for the other block here that was formed after the violation, including the fair value gap. So this was the sniper point to have taken this here. Why? Because we already seen a rejection on our high time frame. So if I was to take this on the sniper points, this would have been my sniper entry there with a small, tiny, hard to see fair value gap. A price has come to take there. So this would have been my first point of entry on this particular trade. Notwithstanding, I couldn't get it there. I still couldn't get it there, but I just left it around this place here. It was more like a turtle soup, not this whole entry here. But if I was to come down lower time frame, this would have been an entry. But on higher time frame, it was just a turtle soup there. Because I saw this zone as a strong zone, and the price should actually go above there. On the return, we could do some selling activity there, sell down to this particular zone here. Albeit I was already selling this market the previous week before I was taking out. So in the previous week, I had different levels of sales. So I had some sales from exactly this stop. I had other sales as a result of mitigation of this place. I had another sale here, and I had one final sale here as a result of mitigation of this zone here. Time will not permit me to show us all this. So after taking up all my profits here, taking out some of my profits, and I think this last position was closed out when price got to this place. I knew price was going to reach this high and sell. So at the point where price rated that high, I was already in the market. And the next thing I was waiting for, was for this pullback to be taken. Right, price has given us a pullback here. After the pullback, we had a nice inducement. So this would have been the next order block that we want to wait for price to come and take. Right, so this is the next order block. But that other block does not have a fair value gap. So if this other block does not have a fair value gap, it's not the green, not this green candle. The green candle there is an inside, but if you check most of my teachings, you understand. So the next places that you wait for price to come and take is any weak rejection. Since all the other blocks are invalid, so the next week rejections, this already mitigated this. This one has mitigated this other block that does not even have a fair value gap. So you cannot take trades from this particular other block. There's no fair value gap. There's no valid other block anywhere around. See, as after this one was taken, even this is not a valid other block because an inside bar of this one is already taking it out. So this became a valid other block, but since it doesn't have a fair value gap, so we are going to neglect it. It cannot be a valid other block. Then nextly, this one should be a valid other block mitigating this one, but this one now itself does not still have a fair value gap, right? It does not have any fair value gap. Then this one actually has to be. So instead we use this weak rejection. I use this weak rejection, or we use the next. But since this one has already mitigated this other one, and this one here is no longer valid, so we have this last week rejection. So that's just it. If you check, I've taught on dynamic POI, dynamism of POI, so you can actually go back and check some of my videos there. So that's how you know that this is the right point the market is coming to. So even if you didn't know it, no problem. We had some violations here. Why am I not using this place as my own violation? Why am I not using this place as my violation? This place actually happened as a result of liquidity rush when price was opening. So I will actually take this one as my main zone here. So whichever way you put it, that was Asian zone here. This way we had Asian liquidity. Asian liquidity was actually swept and taken shots even up to this far extreme was taken. And what was the next thing we saw? Boom, price came back to this valid order block after taking out those liquidity. And this other block, this other block is a very nice and friendly order block because it actually has what fair value gap. So we could trade it, we could definitely trade it. So this is a particular entry that you can't afford to miss. You can't afford to miss this entry. So this happened on Wednesday, and can't afford to miss such kinds of an entry. We trade this one down to the zone we're expecting. Down, because price has actually begun to move down. So we trade this one down there. Then we are very much interested in NFP. What happened on NFP by 130? So this is around 130, right? It's around 130. So around 130, price has come down here and taking out our liquidity zone. It's at around 130. Price has come down here and taking out our liquidity zone here. Zone we're expecting price to get to. So sorry, that's very big. So price has taken out our liquidity zone here. This zone we're expecting price to get to. So what's our next expectation? Our next expectation is that price begins to go up because if you check the release of news as at then, what do we see? The news was actually negative. It means that the dollar has lost its strength, right? It means that the dollar has actually lost strength, and this is on Wednesday. This on Wednesday, right? The initial move was influenced by this speech. The speech gave strength to this speech initially gave strength to the dollar, right? This speech gave serious amount of strength to the dollar. Let me show you again. So this speech was done by Governor Bailey the previous day, and this came up around 2:30. So you can go and verify that around 2:30 by our time. So all this period, this speech, right? So around 2:30. So see all this movement. One thing about speech is that they don't have immediate effect in the market. They take time to manifest whatever it is that they are actually going to manifest. But looking out for this, how do we now go for the NFP? How do we now trade the NFP? So the NFP number one, this is a zone where we are expecting price to reject from, right? It's an inducement zone. So after, what do you do at inducement zone? When price gets to inducement zone, you want to look out on higher time frame. Is there any rejection? So you could start 4 hours, 1 hour, wherever you want to start from. So I'm just going to do a replay for us there. I'm just going to do a replay for us here, starting from our NFP so we can actually see how we should counterlize on the NFP. So we see price, right? Price moving into this particular zone here. This is on 1 hour at a higher time frame. So our higher time frame, this is like 4 hours here. We see the major rejections here on 4 hours. So it has gotten to our inducement zone, it has taken it out. And what do we have? Can come down to our lower time frame here, which is 15 minutes. And what are we looking for? 15 minutes. We are looking for the closest moves. This is 3:15 already. The NFP have started telling us that the dollar has lost strength, right? And for that reason, we want to see that the GBP is going to buy more dollar. Because one thing is this: if the dollar loses strength, if the report comes out negative against the dollar, it means that the extra will be what? Will be selling, right? And everything that trades against the dollar, any commodity that trades against the dollar is going to be what? Buying, because the dollar is what? Selling. The dollar is weak. So anything that trades against the dollar is going to be showing a sign of what? Strength and upward movement. So look at this. This is GBP USD. This is GBP USD. And so we are expecting that For that reason, GBP is going to be buying, but we did not immediately begin to see the buy. So what do? We are going to be waiting for some structural changes here while anticipating the buy move, right? While anticipating the buy move, we are going to be waiting for some structural changes. We're going to be waiting for some structural changes here in the market while anticipating the buy move. Anticipating buy moves, we're going to be looking for some changes in market structure. Once we see anyone, we are good. We are good to take our we are good to make our decision for the buy. Once we see any change in structural uh, okay, so let's see. Keep playing. Okay, so this is first indication for a change. We could still scale down a bit. So we had that we could have taken this as our first pullback being validated, but no, we are going for this as our first pullback being validated. You know that we should be able to see a very strong buy at this point in time. So there are two places we could be waiting to enter this market. It's either we are waiting for this particular order block here as our extreme order block, then with the fair value gap that follows it. We're expecting it here, or on the contrary, we're expecting this with the fair value gap that follows it. So one of these two should actually work for us. So in this case, since the GBP is still very strong, what are we actually expecting? We're expecting, well, I am not going to be expecting price to come back down here because we have already seen a 4 hour sweep, a very, very, very strong sweep on. Okay, so looking at it, we have gotten a violation here of this particular zone there, right? So we have gotten a good violation here. So there are three things, just as I said, we're looking at, sorry, two things we're looking at. Either we have price come back to this other block or to this one, or otherwise we'll be looking at our breaker block here. So there are three things we are going to be looking from. It's either we have price come back to this, or come back to this, or we just have to stick with our breaker blocks there. So the best idea will be for us to stick with our breaker blocks, stick with the breaker block there. And what do we get? So if price comes back into our breaker block, we are already taking the buy. We're not looking for any fair value gaps anywhere because there's no fair value gap. It's just the breaker block theory. And our stop loss is below this, and take profit, where is it going to be? Take profit would be above this high, right? So stop loss just there. So we're not looking for, can't be looking for much in this kind of market because we have just seen a whole lot of moves, and manipulation can be on the high side. You can still wanna wait for this. You could see that you may not see it, but okay, let's do 1:4. So you could counterlize on this trade because in this case, price is actually moving very, very, very fast. So if you want to know why I went for the breaker block instead of the extreme order block, you can come into our DM and we are going to be teaching you why you should go for a breaker block in moves like this than for the extreme POI because market has way it behaves at specific times. So looking out for this. So we get executed into this trade, and we see price moving and moving very fast. So that's that for our NFP there. So how would we have seen? I think price went high, but how would we have seen movement on gold? What would the movement on gold be like? What would it have been like for gold, trading gold? So this was the whole week for gold. And what did we see? This was on Thursday, this was on Wednesday. We didn't see much movement on Wednesday, but we saw something that we could easily capitalize on Wednesday, knowing that price is going to come and take up that liquidity. What we are looking for is for price to give us some structural uh, breaks here. So looking at that, the first thing we see, first violation of structure we saw was around here after this liquidity sweep down here. Had some liquidity sweeps down here, so this was an indication for the upward movement. Liquidity sweep always indicates that price is interested in higher values there. So we had that when price did that, it was good level of inducement. Like I told you, I won't trade gold if I don't see some level of inducement. So this was the perfect level of inducement there. So as I 130, at 115, we had this push to the upside. I really came back down, and I and all my people were surprised. We were surprised about why gold should make such a movement up and such quick movements to the downside again. But we only got to see that it was just actually an inducement move there to take traders into the sell. But we are already waiting here, right? We're expecting for it to take this period high, but it didn't. So when it moved away, it's a result of the news, then it came back and gave us that sweet ending. The one thing about gold is that if gold will give it to you, to give it to you and don't do it sparingly. It's gonna take it from you, just let it have the little it wants to. Let it have the little you can give to it. Because if you wanna keep waging it with your capital, you're gonna be doing a whole lot of waging. So this is a nice 4 ratio, sorry, 1 ratio. 4.5 here we had at that high there. So this one we are taking advantage of the movement of gold on Thursday. It's just one single trading pattern, one single trading setup again and yet again. So this is how it goes. Start on Thursday, 8 a.m. So this was 8:30 a.m. We had New York, sorry, London swept out Asian low there and came and swept Asian high. Then New York was opened around this place. Here we saw this move here. New York took out London, the high that London created, formed its own high as a result of the news and was coming back down. Came back. So there was no liquidity below here for price to take again. So all it could do was to induce this. So it's more like the liquidity it engineered. So it induced that, grabbed all the stop losses, used this other block, and went for a smooth buy up there, continuous buy there. So that's everything we had on gold, and we are still looking at gold for the buy here, a short term buy up to this place, and we could capitalize on the sell. Here this happens to be all the liquidities that it has to take, and looking for our inducement. This happens to be our inducement, so we are not yet taking out inducement. So we are still a bit confident about this trade, still very confident about this trade because price has not been induced. Price has taken out inducement. Then we know that slow movement like this and plenty rejection could mean trouble. But now that there's no inducement taking out, there's slow movement, plenty rejection, just that liquidity is building, of which you don't want to be the liquidity, right? You don't want to be the sell side liquidity that it comes to take before it buys. It has actually taken liquidity over and over again here. All these support zones here that was formed has been liquidated and has seen price move up. So anyway, that's just for this week. But for last week, this was how you could have really taken advantage of the NFP, and it was really great because this was on Thursday, right? We didn't really expect to see much happen on Thursday, but no problem. Market was still moving on Thursday. How would you have capitalized on this? Number one, number one, we saw price rejecting from this supply zone that had already taken out structural low here, forming an inducement. So we would have expected that, oh, price comes and raise this zone and return back. But what did we see? Oh, price gave a steady decline here respecting each and every one other PDRA that was available in front of it. This other block had no fair value gap, but this week rejection would be a POI. Coming back to this zone, giving a nice sell, other block plus fair value gap. Coming to this zone, a nice sell, other block plus fair value gap. So this was around 130, and we had this now run down to this side. And for you to have this kind of a movement down here simply means that the US dollar is actually strong. Let's see that on Thursday. So yes, and we had that the US dollar actually was strong, but by this 130, I for one wouldn't have taken advantage of this trade, of which I didn't. This whole long movement down here on gold, I couldn't really take advantage of it because for me, I hadn't seen what I liked about structure. So this, to me, this is just the change of character, right? On higher time frame, or if you want to go higher, all that I'm using. But to me, this is where the change of character happened, and I'll be looking for sales that ensue after that. And so I couldn't take any sale around here until yeah, which happens to be on Friday. I was expecting price to hit here and run down, of which price just came close around without taking it. That was very painful because I had missed NFP. I still missed the trade that followed, but not to worry. On Monday we had extreme order block here. We also had this zone here. The price was gonna miss again, but on our extreme order block, we took this proper sale there. Because the extreme order block had a fair value gap and some liquidity run away from it, and every other criteria that was needed. So taking this, had our first sale there, and price violating structure here. Price violating structure here. We had a second OB could sell from here. Sorry, second OB here. A nice tiny fair value gap, which is what price has been giving us for fair value gap in the last few weeks. Very tiny. Price tries to mitigate its move every step of the way. So we had that there, and so we had this movement down here. So if you are not taking from there, careful watching of the market on 15 minutes would have helped you taking it from here. But this trade was actually for me taking from the 5 minutes. Right? This trade was actually taken on 5 minutes, and so I was very nice trade taking down to this low here, and we had that. So for me, I'm still waiting for this particular movement here, right? Waiting for price to come up, grab up every single liquidity that I see. Like there are a whole lot of liquidities lying on around there. I don't know why price is still pretending to not want to take them, but when it does that, it's just gonna do it with a very high push, right? So you're gonna see that happening very soon. So that's it for gold and for USD movements through last week. Thank you for being with us. We look to see you in our next videos. We are going to be giving some trade recap for the week, for this particular week where we are taking out some trades, and